It's not just a kind of a audit traditional model, because I think that is proven in 25 years. It just doesn't get us to the promised land. And I think what we try to do is to see if we can combine technology and new ways of thinking to have greater impact. So we do that with things like worker voice, e-learning. We try and drive change in the supply chain, because sometimes a policing mechanism is not going to work. Okay, and that's the reality that we see. Now, let's get to the why is this important. Now, you probably know the number one industry for that has an impact on carbon is the oil and gas industry. But we're number two in this room. The other issue is, and this is really important with the Trump trade war, right? We continue to operate in a lot of countries around the world that rely on migrant workers. Either it used to be just a public relations issue. Well, now, because of all the attention on forced labor, governments have changed rules. So UK Modern Day Slavery Act, Australian government, the US government, and how they do federal requisition when they buy goods and services, as well as the state of California, are all trying to respond to issues of forced labor in the supply chain. And it's not esoteric, people. It's not, actually. I mean, I just got a call yesterday of a factory that did unauthorized subcontracting in China in a prison. So, I mean, this is not like, oh, it rarely happens. No, this is more common. You can't import goods into the United States if they were made in a factory that had these forced labor conditions. Now, obviously, governments are reacting. I mentioned about on the forced labor issue. We know about the Paris Climate Accord, and there's a lot more regulation out. We would all love for consumers to get in the game and basically say, yep, we're going to pay more, 20% more, we're going to pay more on a sustainable product. So I think consumers are schizophrenic. I do. I think that if they cared all about sustainability, we would see massive growth in some of the product categories that have actually had a sustainability platform that actually did more sustainable fabrics. But to Jane's point, we still see a lot of growth in some markets where product are not fair trade or organic or certified. And so I think we're coming to terms with, does the consumer really act at it, and will that actually change behavior? Lots of people would say it may not be exactly now, but millennials are different. How does this impact all of us? I think because of these pressures from governments, from some consumer segments, and certainly from the industry, I do think companies are reacting. Whether it be climate change, companies are making big, bold, audacious objectives. Walmart being one, that we're going to get rid of 1 billion metric tons of carbon in the global value chain. Then you see companies, really front-runner companies, trying to say, well, look, let's just put it all out there. Let's show the world that we care. Let's show the world that there are real challenges, and let's be very transparent. And there's a whole movement of companies putting more and more data out there, not because they're required to do so, but because they are encouraged to do so and they want to do so. So this radical transparency is what companies are doing, which enables NGO groups and governments to begin to hold them accountable to higher performance targets. And if you're not the one being transparent, you tend to actually be graded much lower on a number of different indices that are put out there. You then see organizations saying, well, we got big data out there. We have organizations like in China, IPE, which if you don't know who they are, you should Google them. They're quite interesting. It's an NGO based in Beijing that has been using public available data on environmental pollutants and waste and energy and wastewater, and actually just putting it online. And then, you got reporting. Companies are saying, well, let's make commitments and then let's report publicly. So, and if you don't report publicly on science-based targets for carbon or reduction in waste in your own supply chain, or how you're performing within your supply chain on things like forced labor, you will be more and more expected. So this is driving to a lot more reporting. And when people report, they have to get things in order, right? If you don't have to report, you don't have to deal with the Malaysia factory situation, or you don't have to deal with the environmental issues in your supply chain in China. But once you begin to report, all of a sudden, there's a lot more corporate attorneys and public affairs people and sourcing executives who say, all right, do we need 10 handbags factories? Let's consolidate. Let's figure out how we can improve performance so that we can report a much better impact story later. Now, all of this is happening at the same time that margin pressures at the factory level are are tight, and wages have gone up and continue to go up. Companies that used to be good factories in China, really compliant factories, but because of wage pressures, because of social insurance pressures, they decided they needed to make money by subbing it out. What can we do about it? Well, I think the challenge that all of you struggle with is how can we actually balance the business reality of trying to get good pricing and source from good factories, et cetera, and improve with the sustainability objectives. And Jane mentioned that a fair bit. For us, I mean, we're trying to sort of square the circle, right? Which is how can you have it both ways? And in reality, and a lot of people in my role will tell you you can. Compliance is good for business. It's not, I'm telling you. If you don't pay social insurance properly, and now you have to, it's a 30% increase in your labor cost. That's not good for business when your labor costs go up by that dramatic amount. So when you are dealing with factories that are not compliant and then demanding them to get compliant and it increase their costs, how can you make the argument that compliance actually is good for business? It's only good for business if you were about ready to lose all of your customers. Then pay the extra money, get in compliance, keep your business alive. But it's hard for those factories that are starting from a non-compliant position, et cetera. But we try and advocate that companies strike that right balance. And the first thing we do is to say, well, maybe the data we collect is not the right data. A lot of what you guys collect is factory data, vendor data, number of assessments, did we audit them, did we visit, what's the grade, et cetera, how many non-compliance issues are there, and are they getting better? There were 10 last year, now there's 8. So we have an increase in performance there. I think what we try to advocate is let's be smart about where we put our energy, effort, and resources. And we find the best conversations is when the compliance and sustainability department reports to the finance department. Because the finance department is much more willing to say, why are we spending all this money on audit only? Let's sit down with the top 20 vendors. Let's work with them to really drive impact. They can help us achieve our carbon targets. They can help us achieve our packaging reduction initiatives. But too many of our customers and too many people in the room take a one-size-fits-all. Let's treat the strategic factory at $50 million the same as this transactional factory at $500,000 order. And I think what we try to do is let's look at risk, let's look at leverage, how much business are we doing, and let's prioritize. And that leads to these nice little charts that lead to risk and leverage and how we can actually intervene and focus on those more strategic factories and vendors and really drive them. And then it leads to strategy. It's as simple as that. For transactional factories, ones that mean very little to it, that have high turnover, maybe we don't invest a lot. In fact, maybe we accept an audit report that they give us. By focusing and trying to make perfect program where every factory is treated the same and every factory we do auditing and do it all perfectly, you're actually being distracted and squandering resources that you could be focusing on your top 50 and engage with them at the sourcing level, at the CEO, managing director level, and try and get alignment of values. And that leads to very different interventions that can come later. Look, government regulation is going to come, and it's going to continue. Action, more laws on carbon, on environment, et cetera, is going to come. Investors, financial institutions, I think we see it. And then we will likely see more data on performance on sustainability and supply chain becoming public. That performance ultimately will cover all parts of the value chain. If I give you one sort of advice for those of you with big supply chains, this concept of segmentation, prioritization, it is the simplest idea, but most of the compliance departments that I see don't do it. So just go back to your colleagues and say, why are we treating this guy the same as this guy? Because they're completely different and they mean more to us, and these folks don't. So let's have a different strategy for how we manage them. And I think that nugget is going to see dramatic improvement, better allocation of resources, and greater results that balance the business side as well as the sustainability side. Okay, thank you.